Okay, welcome back to National Report. Here's a live look at the Dow right now, up 250 points, holding steady right there between 250 and 300 points there for the past few minutes here. Trading off to a good start this morning, despite stocks losing steam yesterday afternoon. I think the Dow did finish up, though. Joining us now, Doug Flynn. Doug, good to see you this morning. What do you make of this right now? Because we've seen a few days of green here.
Yes, it's actually been pretty good. Well, when you have the kind of downturn that we had, for those who got invested at that low, some of them traders that got involved, it isn't uncommon to take a little bit of profit like we saw yesterday after a 20% jump off the bottom there. But it's good. I think we're settled in here now to okay, this is a more normal range to be expected off of where we were till we can kind of see how the rest of this plays out. We finally got some good news coming through, and so the market has been looking for some good news, and it saw that. So that's where we are today.
Moving from the health crisis to the economic crisis, just let's stay, I'm going to stay in this lane here. The president expressed some ideas for reopening the economy in an interview with Sean Hannity on Fox News last night. Here's what he said. He says this: "I'd love to open with a big bang, one beautiful country, but it's very possible. We're looking at two concepts. We're looking at the concept we open up sections. We're also looking at the concept where you open up everything." So there's no date set here, but Larry Kudlow, Steve Mnuchin saying the White House is aiming to reopen the U.S. economy in the next 4 to 8 weeks. Based on what you've seen, is that a possibility?
Well, I do think it's a possibility in parts. For instance, we're working full remote. We do have somebody going in as an essential business to collect mail and whatnot. But generally, we're all working on full remote. We can easily go back in 100% as soon as the coast is clear, and many firms can do that. There are a lot of companies and different establishments that cannot do that, and it needs to be rolled out, and it has to be thoughtfully put together. So I don't know a blanket, hey, everybody do what you want is the best thing, but we're looking for an all clear here. We have to take the pause off in New York, for instance, before we can even think about doing it, even though we can do it as an essential business. But still, just having people comfortable to go back and start to be in close quarters again is how I think it'll more likely roll out.
A lot of people miss so much, right? Interacting with people. I mean, so much has changed in just a few weeks. Can't even go to a restaurant these days. In fact, maybe you know about this one. A restaurant chain with locations in sections of the South and Midwest is shutting down. The parent company that owns Logan's Roadhouse, I've been there many times here. They have great steak, great butter, by the way. You get the little rolls on it. It's an amazing place. But they've closed all 261 of its locations. They're done. Fired nearly all of its 18,000 furloughed employees, except for its franchise locations in eastern North Carolina. But this is an example because it's not, Doug, it's not the only company we've heard of doing this. So they're not, they're done. They're wiped off. Waffle House closing hundreds of locations. This could be the new normal, Doug.
Well, there's no doubt in a recession, you're going to have these kind of scenarios. You don't really know how close people were playing it to where they were, for instance, on a personal level, many people, as you know, are two paychecks away from essentially not paying their rent or even bankruptcy. So businesses sometimes run very thin as well. And you don't really know when everything's going if they've saved for the rainy day, so to speak. And so a lot of companies that had too much debt, in this great economy, you should have been in really good financial shape. There may be other outside factors, but you're going to see here who survives and who doesn't. And that's just what happens. It accelerates companies that probably weren't as strong to begin with, although we didn't know it because it was masked by how well everything was going. But there's going to be some fallout. There's no question about it. There's always fallout in recessions. We do have recessions. This is the 6th one since 1987. The problem is we had 5 of them from 1987 to 2008, and we haven't had one in 11, 12 years. So, we're just not used to that. So those things are going to happen anyway. But it's exaggerated because this one was really effectively caused by the government shutting everybody down. It wasn't, outside factors here. They made us all shut down. So there's going to be a little bit of an exaggeration there, I think.
Right. And that's a fact to again, remember that everyone was told to stop going to work. They were told to shut down. So now we're seeing the aftermath of that. This may be out of your realm here, Doug, but I get this question to me a lot. When you ask the government to shut down, when you ask, rather, the entire country to shut down, to not make money, but you're still being told to pay your rent, to pay your mortgage, but with what money? At what point, Doug, does someone step in here in the administration and say, hey, look, if you're telling everything to stop, everything needs to stop?
The problem with not paying your mortgage and other things is that people don't realize that behind that are bonds that are paying people who invested in those mortgages. So there's a whole cascading effect here if you do that. So a bank can delay it. They can add the payment to the end. They can get creative. And I think you're seeing a lot of creativity in the private sector more than anything else. That's what we do. We adapt. We roll. I mean, whether it's 9/11, 2008, we're still here. We figure it out. And many places and people are going to do that. Individually, this gets back to the basic financial planning tenet of having 3 to 6 months worth of expenses in cash, in savings. I know it's so basic, but so many people don't even have 1 month's worth of expenses because things do come up. And we don't really think about it when everything's kind of humming along and we're doing well and we're striving and we're stretching. But these are the times when you realize, listen, if I can get through this, the next thing I'm going to do, or the first thing I'm going to do, is try to get myself in a better cash position.
Absolutely. That's something that will be learned among so many other things. Doug Flynn, certified financial planner, the co-founder of Flynn Zito Capital Management. Good to see you. Thank you.